Welcome back to Market Day Report. It is Crop Progress Tuesday. Let's get to the wheat trade here. I want to show a couple of things here we haven't had a chance to show you with all these numbers here yet. Wheat conditions around the nation, and then we'll go to Chicago and Todd Horwitz ready to talk about wheat, corn, and the soybean trade as well. Nationally, looking at the condition of the wheat crop, we do see 8% poor. Not a lot of change here from a week ago. Looking at the poor to very poor condition at 8%, last week 7%. And over on that right side, good to excellent did not change. 62% of our wheat good to excellent last week. That's the same as it was a week ago. And from a year ago, if you remember, if not, we have it for you. 45% of the crop was rated good to excellent. So a big, big jump from a year ago. Let's jump to Chicago. Our good friend Todd Horwitz standing by live at the CME Group, talking about this grain trade here now as we into mid-May. Todd, another day into the month of May. How do you like this space overall? You like to call it space, so let's do that same thing. And where we sit here as we head to mid-May and through midway.
You know, Mark, good morning, first of all. I think that I think we're getting a little bit ahead of ourselves here. I think the progress has been just a little bit too quick. I'm concerned that there's too much coming here, but I do believe, and I've been banging my head trying to figure out what's going on here, and it looks to me that this might be more of a play on the dollar right now, and some other plays. I think that we're a little bit too fast, especially in soybeans. I think that there's certainly going to be some selling pressure come here. I don't believe that we can sustain the rate at which we're going up right now. I do believe that there has to be some selling pressure, and I believe that we'll see it. Again, the question is when. But again, this looks more like a dollar play to me, and it looks more like a play on whether or not they're going to raise interest rates, believe it or not, because that would make a weaker dollar if they don't. So overall, I mean, corn looks great. Looks like it's going to go up to and test that high at 402 in July. I think that we're looking there, but again, I believe that you've got to see some pullback here. If we really want to have the strong market that I'm looking for coming into, I think that we're going to have to see some pullback here and really kind of get more into the same type of pattern that wheat has been in, because wheat's been in that winding, sweeping between 465 and 495, and you just saw every time we get down around 455, 460, it spikes back up again. We do need, I think, some selling in both corn and beans, but I think especially in beans if we want it healthier. I know farmers and producers told me here we need some selling, but again, I think for a healthier market and a stronger market, a little bit of selling would not hurt anybody.
Well, they're not selling today. 15, 16, 17 cents higher here. So November up to the 1070 level here, Todd. And it seems to me that a market like this needs fresh information. They're getting that in the form of our progress reports. But do you think there's some outside factors that are going to play a bigger part?
I think there's more outside factors. Again, the progress reports, as you know, I'm not a big numbers guy.
Yeah.
So I think that this is a bigger story, and I think this is more the effect of what's going on in the general economy, and that's what we're kind of seeing here as this last push up. But if you look at the volume is actually pathetic. Volume has been really down the last couple of days. So to me, this is more of an artificial move that's either being done by an outside influence. Maybe there's a few last-minute shorts that tried to get in, but I don't think we'll take out the 1091 high we saw in the near-term beans last week, and I don't think we're taking the 402 out in the corn. I do believe, again, I love the space. I just don't love it from here anymore. I thought it was a great buy down lower, and I think we're going to get back to those prices and become buyers again.
Very good. Yeah, maybe a bit too far, too fast. Let's get to the numbers. Those of you tuning in on radio, Todd Horwitz back with us in a minute looking at the livestock trade. Corn still 3 cents higher, 2.5 to 3 higher. July, 396.5. December new crop at 402 and a bit better. Soybeans, as we mentioned, 17 cents higher. July at 1081.5 now, about a penny from the high of the day. November likewise a penny away from their high of the day, 1070 November beans. That's up 15. Quick look at the wheat trade then. July is in the lead now. May off the board. July Chicago up 7 3/4. Kansas City July is up 7, 460.5 and about a penny from their high. And Minneapolis, the July contract 5.5 higher, but near the high of the day there as well. 542 3/4 right now. A break to look at the livestock trade. We'll see what Todd thinks about cattle, feeder cattle, and hogs coming up in 1 minute. Welcome back to Market Day Report as we are 10 minutes to the top of the hour. And our thanks to our friends at AgriLiquid for bringing us and being partners here in our livestock updates. Back to Chicago and Todd Horwitz live from the CME Group in Chicago. Todd, I want to start live cattle futures and more specifically that June contract. Higher cattle cash last week, a big jump, 9% in just the last 6 days in the dress beef, yet we can't get that June over 123, 124. What's going on there in your view?
Well, I think exactly what we talked about. You know, remember the cash a few weeks ago was getting hammered, and nobody wanted any. So now you've got a little bit of a bid here. But overall, the charts are fairly clear. The technicals are really clear here. And right now, 122 to 124 is a key level, and I believe we're going to probably see a little bit of a pullback in here. I think you got to watch 122 until this contract comes up. That would be my key benchmark. I do believe we'll probably see 118 again before we resume higher. I think we're going higher. I think that was a great action for a trading perspective and for a market the way they flushed out the bottom, because that just builds a stronger base. So I'm not saying we will go there. I think that's in play though. 122, if we can hold 122, we'll go higher from here. But if we can't, I think 118 is in play. And again, that's where I want to be a buyer. I'm looking for spots to always the buy right now, because again, I like, as you call it, I call it the space. I think we're going to go significantly higher. But I think again, when you look at technicals, you have to watch the markets work. And I think the best work for this market would be a little bit of a pullback.
Yeah, but the calendar is going to be a factor, I would think. You know, you're $8, $9, $10 difference June to where the cash is trading, and you know we're already in the 17th, 18th of May.
You know, but again, it's just like oil. It's like everything else. We have a wide divergence, and then all of a sudden it's gone. And that's what I think you're seeing. Again, these are things that happen regularly. We see it in every market, especially markets like these that have outside cash markets and spot markets. We see this happen all the time. And again, that'll disappear one way or the other. Either the future is going to run up and catch it, or the cash is coming down. I would say my guess is the cash comes down and meets the future, because the future's got, I think, a better handle on it. And once Memorial Day gets over, that again changes the dynamics. A lot of this is being held up because of that.
Man, by the way, bottom line, you're thinking we might go down first, but you still see a lot of upside in cattle, though. Am I hearing that?
You hear that 100% correctly.
Right.
I believe we're going significantly higher, but I do think that there's work to be done a little bit on the downside first.
All right. Over in the hog trade, Todd Horwitz joining us live. It's Bubba Trading, BubbaTrading.com. Great website information there, producers and information. He loves to talk to you and maybe get you in one of his webinars to help you in your marketing program. Lean hogs. All right. We got the June at near 83. Still in that range. Can't get above 84 and stay there.
This is concerning, Mark. I really thought we'd break out here, and we have not. Now, if we can get above 84, I think we could be off to the races. But, you know, you've got a lot of things that are in favor of this right now, and we still haven't been able to break this market out. I've become a little bit more neutral here until we can figure out if we can get above 84 or below 80. I want to stay in the neutral buys here, because I think really this range is going to stay just like it is.
And if you're a producer, then what's the strategy that you want to, if that being said, if we're going to stay in that range, you just keep your hogs moving in an orderly fashion?
Absolutely. I think you keep taking the money out here. I think you keep them hedged. I think you keep yourself, again, if you alleviate risk and you alleviate volatility, then you can do whatever you want. Then you say, hey, I want to unload some here. I can do that here because I know that I've got protection, so I can do whatever I want. And that's what we do, is leave it up to the farmer and producer to put them in the best position.
Very good. Well, we thank you for your time putting us in position to consider these things. Todd Horwitz, we'll talk to you tomorrow.
Mark. Thanks, Mark.
Very good. Thank you, Todd Horwitz. Bubba Trading. Real quick, I want to get through these numbers. Those of you tuning in on radio, live cattle futures back and forth on the day, and June is higher by 20 points, 123.22. Feeder cattle on the day back and forth, looking at a higher trade right now. The August, May off the board soon, up 18. And our hog futures, we see, again, very light volume here as well on livestock, Todd, saying June hogs are down 14 points, and in that range, 80 on the downside, 84 on the top side, and we're right in the middle right now.
All right, thank you, Markets Editor Mark Oppold.